for watching Smart 24 TV, where we drive your business. And my name is Anthony, your host. This is Financial Markets, and we talk different markets around East Africa, especially here in Uganda. Now, the Bank of Uganda recently released a monetary policy statement, and this monetary policy statement was released on the 6th of October, following their meeting there last Thursday. And at the Monetary Policy Committee meeting, the Bank of Uganda increased the central bank rate by a 1 percentage point to 10%. Now, this is a very new thing for us here in Uganda, and of course, due to the recent inflation that we have been witnessing, the Bank of Uganda says it had to act really fast. Now, a combination of global factors, the recent drought and the weaker shillings to the US dollar exchange rate, among other things, have driven inflation to a high level within the period of 2022. And this is the highest recorded since 2012. That's for the past 10 years, deteriorating the inflation outlook. Now, the headline annual inflation rose to 10% in September 2022 from 9% in August 2022. Just within a space of 1 month, we're seeing the inflation go to 10%. And remember, we started around the second quarter rather, at about 6.5%. Between 5 and 6%. Now, by the end of August, inflation rate had already hit 9%. And now in September, the inflation hit 10%. And the Bank of Uganda says it had no option but to actually keep on escalating or hiking the central bank rate. Now, when you look at the annual core inflation, which includes now the volatile food and energy prices, it rose to 8.1% in September 2022 from 7.2% in August 2022. Now, the annual electricity, fuel, and utilities inflation, which had been increasing since the beginning of the year, declined slightly to close to 18.7%. That is within the month of September 2022 from 19.6% in August 2022, offering some sort of relief against the price pressures there on the market. In the coming months, the headline inflation is forecast to rise and average about 7.3% in 2022 and between 8 to 10% in the year 2023 before declining back to 5% in the year 2024. So the projections of the increasing rate are even further going to go into 2023 according to the forecast of the analysts at Bank of Uganda. However, the outlook for the inflation is highly uncertain. Several risks, of course, lie ahead, and the balance of risks is still tilted upwards. So it's most likely that inflation is going to increase than it is going to decrease. And these upside risks include, of course, the entrenchment of the higher inflation expectations, as well as escalation of geopolitical tensions and associated supply chain disruptions, of course, due to the Russia-Ukrainian war that is still ravaging in the parts of Europe and Russia. And then the stronger monetary policy tightening by major central banks, further weakening the exchange rate. Of course, central bank here in Uganda, the Bank of Uganda, is not the only bank. In fact, matter of fact, it's one of the last banks that has actually got to hike this much. The Federal Reserve Bank in the United States has hiked the interest several times. The Central Bank of Kenya has done the same for several times this year, particularly within the last 3 months as well. And several other economies around the African continent and the globe, they have had the issue about the inflation and, of course, hiking the rates. These rates definitely do affect you and me and how we are going to make our investments, because they do affect the yields on the bonds. They do affect the private sector, basically because it translates back to how we're going to be able to access credit from banks, because banks borrow from the central bank at the central bank rate. And so definitely this is going to bite us. But all this is done by the Bank of Uganda to see that they try and regulate the market and see that inflation remains under control, and of course try to tame this kind of escalating inflation rate that we are currently witnessing on the stock market, on different markets around the region. Now, nonetheless, there is a downward risk for inflation outlook, including a global recession resulting from the fight against inflation. Of course, because of this fight, as the central banks hike the central bank rate, definitely there's a very likely happening of a recession. And of course, this has been projected by many financial analysts around the world, a global recession. And so that is something still we might have to look into. Now, faster decline in commodity prices is also another downside risk, and the lower domestic demand due to declining real income. So as of course inflation goes up, the income remains the same, and so you will have to purchase, you can purchase less with what you are earning at the moment, and so that definitely still affects you. Now that was the central bank rate, central bank monetary policy statement that was released last week, and reflecting that on the yield of the yields from the bonds. Of course, it's not yet really reflecting yet on the yields, but we are yet to see that. Remember, you can be able to borrow government, to lend to government rather, on a longer term basis or short term basis with treasury bonds and treasury bills. That is through a primary dealer, or now through Altex East Africa. Of course, Altex is offering you a better option because you can now do it with your mobile phone by dialing *292# and following the prompts to be able to buy or even sell different securities across East Africa and in Uganda as well. Now, away from that, let's move straight into the Nairobi market. The NSE is still escalating, and yesterday Nairobi Stock Exchange had about 45 of the listed 65 companies participate in the trading, ending the day with over 16 gainers and close to 19 losers on the market. Now, Ncba Group led the gainers with a share appreciation of close to 7.3%, closing at 32.35 Kenyan shillings per share. Ncba was closely followed by Car and General Kenya, who gained about 7.14%, and Scan Group, who gained about 5.18%, and Nairobi Business Ventures closing at a 5.13% gain as well. Now, on the losing side, we had Sanlam Kenya, who came out last with an end-of-day price depreciation of close to 9.8% and at about 9.02 Kenyan shillings closing price. That is Nairobi Business Ventures there, rather Sanlam Kenya, and TPS Eastern Africa Serena at a 7.14% price depreciation there on the Kenyan market. TransCentury was another loser at a 6.67% price depreciation on the stock market. Safaricom recorded the biggest volume on the Nairobi Stock Exchange after having gained about 12.8 million shares that was traded on the stock market on Safaricom. And of course, he's the usual suspect, of course, being one of the biggest traders there on the Nairobi Stock Exchange. And Safaricom was also closely followed by Kenya Power and Lighting Company, who has also become one of, gained the spotlight on the market recently after having traded close to 6.73 million shares on the Nairobi Stock Exchange. We also had Nairobi Business Ventures trade about 430,800 shares on the Nairobi Stock Exchange yesterday. And KCB Group had about 430,600 shares that were recorded on the stock market. Regarding the performance of the index, the NSE all-share index closed the day with an appreciation of close to 1.22 points, and that was a close to 1% appreciation, but specifically speaking, we had 0.94% gain on the all-share index, and the index closed with 130.35. Yes, the Nairobi Stock Exchange all-share index is back to the 130, which is a ray of hope, at least for people who made losses, especially during the Kenyan elections. Of course, the market stumbled there at the Kenyan election and also during the COVID-19 pandemic. And now we are seeing a different picture on the Nairobi Stock Exchange, and returning to very intense activity there with this particularly very interesting performance here on Nairobi Stock Exchange yesterday. Now the index has so far on a 1 week gained about 2.91 points and closed at about 2.91% appreciation on a weekly basis, and a 4-week loss of still 6.77%, which they still have to make up for, but an overall year-to-date loss of still 21.69% that is starting this year. Other remarkable indices that performed were the NSE 20, who had about 0.89% price appreciation, and NSE 25, who had about 0.73% appreciation in price in points there as well. So the indices are doing quite well in Kenya, and if you have not invested in the Kenyan market, I'm warning you before it's too late. Please go invest some of your money in Kenya, and you will not regret, because the market is returning to full blast activity, and companies are gaining, and of course we are even expecting more in the coming few days or weeks as well. Now let's look at the detailed performance of Ncba Bank. Ncba was the top gainer at the Nairobi Stock Exchange yesterday, and Ncba, of course, is a bank. We have a subsidiary here in Uganda, and formerly the National Industrial Credit Bank Limited. That is what it was known as, NIC. And this Kenyan-based company provides retail and corporate banking, brokerage, bancassurance, as well as investment banking services. The bank also offers its services under personal banking, including savings accounts, credit cards, business banking, covering business advantage accounts, loans, and asset financing, as well as insurance financing as well. Ncba Bank trades under the ticker symbol Ncba, and the international securities identification number for the company is KE 000406, and currently it is the 7th most valuable, coming very close in competition with Safaricom and other big boys on the Nairobi market there. And currently it has about 53.3 billion Kenyan shillings worth of shares, and which makes about 2.63% over the NSE.